Okay. All right. All right. So, all right.
You
So, good
cold?
morning. Maybe let's start with some sharing of wins. Any wins you'd like to share? Learning, wisdom.
Yeah, no, I'd like
Um,
to share a win with you. I have a heater.
you have a heater? Okay. Okay. All right.
Yeah, it means I don't have to sit in my jumper and coat and sweatshirt and
Okay. Okay. All right. So
I'm
that's
I'm 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 being
convenient.
playful, Shunyun.
Okay. All right. So I guess
um,
the heater. Yeah. Go ahead. Go ahead.
uh, yeah, so yesterday I did I came into the office for an hour or
Okay.
so,
Uh-huh.
and it was really, really good. I just I just did it some preparation work for the week, did my
Mhm.
RDOS on myself,
Okay.
looked at what I wanted to achieve for the week,
Mhm.
what my main goals were, and yeah, it's very beneficial. Walked out feeling really strong and positive.
Oh, okay.
So I do
All
you
right.
do you do this thing, the weekly planner?
Well, it's not exactly standard. I guess the coach format. I do weekly planning, and I think there are some elements that are similar, but
Right.
I haven't adopted I guess the exact format for the weekly planner yet. But okay, since now you're mentioned, I definitely want to look into that.
I well,
Right.
okay. I just found it quite useful because here's the thing, right, Shinyan, we've
Mhm.
paid for
Right.
this.
Right. Right.
So, and what is it? It's the learning of years of other people's mistakes.
Right. Right.
I
Sure.
kind of
Right.
thought, well, if it's from their mistakes and their successes, why not
Mhm.
just try it?
Right.
So there's a
Right.
couple of things. Now, I mean, it depends on the type
Mhm.
of person you are, really, in terms of
Right.
how one assimilates information and
Mhm.
organizes and structures their days and stuff like that. I'm
Right.
not very structured,
Okay.
so I
Right.
like
Right.
to. I'm very much more of the moment, so I like
Spontaneous.
things to happen. Yeah, spontaneous. Anyway.
Okay. Right. Right. Right.
Mm.
Okay. I see.
But what I found interesting was on. It's not. Why is it not doing it? Come on. Let me take the
Mhm.
background off, and I can show you. Hold on a second. Sorry.
Okay. All right.
No, wrong. Its camera might blur my background. No, don't. Maybe if it will work like that,
Mhm.
that'd be any better.
Okay. Yes.
No, that's not working.
Okay.
Choose my virtual background.
All
None.
right.
There we go. Right. Okay.
Okay. All right.
Fine. So what that does then is that's just. So this is just the. So this is just for the quarter.
Right. Right.
All of that. Those are my um, goals for the quarter.
Okay. Okay.
Now, that's a lot of goals to get done in one
Mhm.
quarter, I think.
Right. 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 Okay.
But there's 24 in total, so that's what 12 a quarter, I suppose, isn't it?
Mhm. Okay.
No, what am I talking about? 4, 6, 3. That's 8. Anyway,
Mhm.
but um, yeah, it is 8, isn't it? Yeah, it's 8. So that's 8 per month.
Mhm.
Okay,
Okay.
which is
Okay.
only roughly speaking 2 per week.
Mhm. Okay.
Actually, when you think about it like that, that's that's that whole thing in possible goals. If
Mhm.
you're doing 10x in over a 25-year period, right?
Right. Right.
Then it's that whole breaking it down into really simple things. So that's really interesting. And then each week you've got your 3 goals here that you want to do, and then you've got a bunch of things that you want to get done. And then this is
Okay.
all about
Okay.
sales
That's
here
right.
and making money and stuff like that. And then at
Okay.
the end of the week, you can do this analysis of what went really well. So these are all your wins,
Ah, I see.
right?
Okay.
And
Okay.
why they're
Right.
wins, right?
Okay.
And then
Okay.
what your actions are for to follow up on that.
Right.
So
Right. Okay.
it kind of condenses your line of thought, and you do that.
Mhm.
So I started doing that the the week of my last coach.
Okay.
So, and also interestingly enough, what it does here is that you can put your buffer days and your free days, and then you calculate how many free days and buffer days you have each week, and then how many you've got in a quarter. So again, it just, you know, it's just enabling, and then referring back to that and the pocket coach, they're both really cool ways of just what's the word, what's the word,
It's
really
a very
cool ways
structured. It's a structured
Yeah.
way, or
yeah, it's
accountable?
very structured.
Okay,
Yeah.
I see. Okay, wow.
Anyway,
Okay.
I mean, I've yet to say that it's hands down the perfect system, but it's
Right.
certainly an improvement on not doing it. And
Right.
it's, you know, it doesn't stop me from journaling. It's still journal.
Okay.
And the journaling is another element. So it's just the journaling is kind of like the thoughts that we have, and the kind of the ideas that we stimulate in our minds as and when we journal, as opposed to what are the kind of the actual requirements that we need to hit. So
Okay. Nice. All right. So yeah, since it's just the two of us for now, maybe I'll like to know if you can also share about what is one commitment, you know, one commitment, one obstacle, and any wisdom you've learned.
what, in the last week?
No, the week forward. I mean, basically, what's ahead of you? What's the present commitment? The one commitment,
Okay, fine.
and also obstacle and wisdom.
Commitment. My one commitment is achieving the goals for the week that I've already set out from my RDOS. That's my commitment.
Okay. All right.
Now, so that's my one commitment. My obstacles are all. I'm always the obstacle, and I think that because I'm the only one, you know, I'm the one responsible for my life.
Right.
Now, there's a difference between if one sets a goal that has a third party involvement, then one might argue that the third party you cannot control, and therefore that is the obstacle. But then why set the goal that has a third party commitment? And if you set a goal that has a third party commitment, then you ought to be knowledgeable enough and responsible enough to manage that third party so that they can adhere to the timeline that you have as a commitment, you know, as your commitment, right? So that'll be that. But then knowing that I am the obstacle, then that also means that I've taken the responsibility of solving the issue of being the obstacle, so that I'm no longer the obstacle.
Okay. So you're saying that by being aware, that actually helps somewhat to resolve, right?
Should do, yeah. So everybody says.
All right, great. So any wisdom you'd like to share? Any wisdom learned this recently that you'd like to share?
Wisdom. No, I think it was interesting observing, like from the previous week, Chris's response.
Oh, okay.
That really struck me.
Okay.
Because you know my criticism of him has been, well, he talks a lot, but it doesn't actually say anything.
Right.
And when we directly asked him, "Are you interested in investing in JCF?" like months ago, years ago, right? He came at it. He answered with a very kind of just wishy-washy, talking nonsense.
I see.
Right?
Okay.
The moment you sat there and gave him some very simple, hard numbers and told him that what you were doing, you didn't actually. I don't think the actual. You didn't directly ask him, "Do you want to invest?" Because he didn't have to, right? Because he straight away did the calculation. He straight away made his assumptions and straight away offered.
Right.
And it's just all about, you know, that's the offer was a no-brainer. It was enough. It was $100 million offer, right? It was good enough for him. But again, it's that also brought us into another line of dialogue about, what the assumption is, and what they assume they are getting for that, and so on and so forth, and being clear about what it is that we're offering, which led me to the message that I sent you over the weekend. I don't know if you've listened to it.
I listened to it, and we can discuss about that. Today.
So I just thought that wisdom there, that I would call that wisdom, because it's just interesting to to see to see how people react to things, really. So.
Okay, very nice. All right, thanks. Thanks for sharing. All right. I thought that's I guess that's an improvement on my part as well.
An improvement?
A progress, right? In terms of how presenting value so that it's understandable by Chris, and from his frame of reference, it becomes understandable for him, and also better, easier to make, I guess, positive response decisions.
Perhaps. I just think the nature of what we were, what was offered was different, right? I guess you're right. And looking at it from that point of view, you're right. But I wouldn't have put it like that. I was looking at it more from what can we learn from that, and what I believe I think we've learned is that it's all about motivational triggers. And it's like there was enough, I suppose, clarity for the motivational triggers to be activated.
Thanks. All right. So I'll share about my part. So wins, had a great camping trip with my son this past weekend, with his classmates. Talk with a bunch of teachers, parents, learn about what they're thinking, what they're doing. Ian, so basically, various discussions around Ian trying to get some angel investment, without success yet. But a lot of learning experience. But I would say the biggest win was yesterday. I had a really difficult moment, actually to the point of actually crying out loud about my inability to I guess to pull deals together, to I guess to find funding and to make things move to the next stage, and just lack of results, right? But also because I currently don't have what Ian is asking for, the 2 Ethereum, but I really want to move things forward, with this this commitment, taking his offer, and not later, actually at this stage. So I actually sent an email, which, by the way, you are CC. I don't know if you've seen that yet, but basically.
The challenge with that email, I started looking at it, and there's so much repetition in there. It's clear. It's hard for me to understand what's being asked.
Oh, okay. So I guess it's the latest. I sent there was a few sent by arrow, but the last one, the last email is the complete one. Okay. So basically what's being asked is, just to confirm what's the actual amount of Ethereum, because there were 2 versions, 2+6 and 2+4. And I think in his latest offer it's 2+4, but he confirmed 2+6 when I asked earlier. But I think he meant 2+4. But anyway, but then I also want to reduce the 12% to 10%. So that's another ask from our side. And actually, if we were to raise 15 million, that 2% would amount to about 300K, $300K US dollar. So but
you got what?
But anyway, the thing is, the win is sending that email, and be committed to back it off with however approach, which I haven't yet the full idea yet, but I'm committed to get some things worked out, basically burn the boats. So I guess that's a couple of wins. So the commitment basically.
So why is that a win? Sorry, that you brought yourself to tears.
Oh, because that was a difficult moment. I mean, it's basically committing to something that I don't have yet, right? I mean, I'm committing to pay him to Ethereum, which I don't have, right? And also,
Yeah, but your commitment to pay him to Ethereum was the deadline was yesterday.
right. So I don't know if that's still valid. So, but I guess
Well, I
it's,
doubt it, given that it was yesterday and today's today.
oh, okay. Well, it was sent yesterday.
Unless he's extended that deadline.
Right.
I
No.
mean, here's the other thing, right?
Mhm.
Okay, fine. Go on, carry on.
Yeah, but I guess the win is to basically to willing to accept the offer, make that move. I think that's the win. It wasn't it's basically committing first, before finding ways to actually to do it. Yeah. So I guess that's the that's the that's the part. Okay, so right now the commitment is to get the contract with Ian signed, okay, as quickly as possible. That would be the commitment. I see that as a point of no return of sorts, because that will basically kick off a lot of other things. And in the process, it will also kick off a lot of things. Okay, for example, getting Mike on board, like like make sure Mike is happy, right? Make sure Mike is happy. That's
I'm
also
always
part of the
happy.
challenge. Part of the challenge. No, I mean in a business sense, right? That Mike see this as a valid, right? Profitable business opportunity, right? I
Mm-hmm.
think that's right. I want to make
Make no
sure.
mistake, Shunyun,
Yeah, right.
I genuinely can see the opportunity that this
Mhm.
holds for us
Right.
is phenomenally big.
Yes, no
Again,
doubt, no
it's got
doubt,
the
no
scope
doubt.
of being
Yeah, right,
absolutely
right,
stratospheric.
right, right,
Um,
right.
so that's why I'm still at the table.
Yeah, I
I've
know,
just got to be
Yeah,
convinced about some of the
right,
practicalities of getting it
exactly, and
from.
that's perfect. I appreciate that. I'm not saying this from the point of view that I think you're the obstacle. No, I'm not saying that. I'm saying this from
Well,
the
I
point.
would.
I'm
I don't know. I would.
saying this as that's the things I have to figure out, right? I have to sort of figure out how to pull this thing off, right? I have to figure out the right model, right?
But
The right, I guess the
that's
right
what
raising.
consultation is about. That's
Right,
why we're in it together, right? So if we're
right,
doing
right,
this
right,
50-50 in that kind of context, then we
right,
have to be. That is something that is a that's a responsibility that sits with both of us.
right, exactly,
Because you could argue that my frustration is the same as yours.
Right,
In
right.
that, how long have we been talking about this sort of stuff, and
Mhm.
where are we? We're no further along the line, really.
Right,
We've inched forward a
right,
fraction,
right.
right? We've not,
Mhm.
we're trying to move a pyramid from Gaza to I don't know
Right,
somewhere else. We haven't moved it
right,
at all. In fact, just the tectonic plates moving across the earth has moved it more than what we've done, right?
right,
So
right.
that's a responsibility that sits with both of us. Having said that, there's got to be something that brings it forward.
Right,
So,
definitely, right. So yeah, I think there's tremendous opportunity, and I can just sense it. This is which is also why I decided to, just make some of the big moves. All right, so the obstacle now I'm seeing is have to get the model right. Okay, when I talk about the model, it means that a collaboration model that works both for you, but also for some of the other current partners, right? The architect, Henry, the property manager, and everyone who's involved, right? Just have to bring a model that works. And so people feel that their effort would be properly compensated, right? And if this whole thing pulls off and are willing to contribute their expertise toward this, right? So I think, and obviously once that's done, then if if we can get everybody's interest aligned, right, in direct alignment, then obviously it's to find the right, the funding, moving to the funding stage. And I am fully committed to basically get the funding done by first quarter. That is my commitment. Okay, so yeah. So
let me
mhm.
I tell you what, just because you're talking about this,
Right.
There's another outfit that does. I'm sure they do funding.
Okay.
They could help with funding. So I've just pulled them up on my other screen.
Okay, sure.
The
All right.
Telegram chat that I've had with them.
Yeah, we can discuss. Maybe I'll finish this part first. Okay.
Sorry, beg your pardon.
Yeah. No. We can discuss that.
Very hard for me to keep quiet.
Wisdom share. Okay, so I actually watched one of Ben's latest video. Okay, I think it's just out for a few days. It's about 3 steps, kind of for 10x growth. But it's a 18-minute video. Okay, I watch it in fast speed. But I think he rather nicely string together everything he's been discussed so far and put that into 3 major aspects. Identity, okay, which is your vision, goal, and also how we see ourselves. Character, okay, character. So character is basically kind of the floor that we don't go under that. And the third is mastery. Okay, it's mastery. So mastery, it's about hunting so good they can ignore you. Okay, so these aspects. So he sees as identity as the kind of, I guess, the ceiling, and it's the vision, and character is kind of like the filter. Okay, and then you try to bring mastery to that. So I think it's it's a rather nice framework that kind of combines a lot of the other things he's been discussing and sharing, and also I believe he's putting this into his new book, Rapid Transformation. That's his next book coming out this year. So I think it's just a framework that sort of incorporates, all the concepts so far: 10x is easier than 2x, gap and gain, who, not how, pretty much everything. So yeah, I guess that's a win. I haven't. I like to say that it's something worth kind of digging into. Okay, digging into in terms of comprehending and putting into practice better. But yeah, so for example, talks about raising the floor, so raising your character, raising what you say. So identity, he also mentions what you say yes to. Okay, kind of the vision is what you say yes to. Character is what you say no to. Okay, and when you raise the floor, when you raise the floor higher, you will also be able to reach higher ceiling, higher identity, higher vision. So yeah. All right, so I guess that's my sharing. Okay. All right. So yeah. Sorry to interrupt you, but I guess feel free to feedback and
No, it's fair play. I was interrupting you.
Yeah. Okay.
No, that's good.
So, yeah.
Okay, so look, a couple of different things then. So I know you're very fixed on Ian because you see there being a big potential there.
Mm-hmm. Okay. Right.
And so that's why you're chasing to it. But are you really chasing? There is no guarantee on anything.
No.
Ian is not guaranteeing you anything.
Fully understand.
What you're attracted to is the big number. The big number is Ian's potential to push out to a huge volume of people.
Right.
In the same way that your ClickFunnels coach has 300,000 on their database. That's the thing that excites you. Right. Exactly. The fact that her database is 300,000, and if she pushes it out to that 300,000, you only need to achieve a small fraction of that.
Right.
Now, you found Ian, we had a chat with him, and what did we learn? Last time he said, well, I want free Ethereum and 15 or 12%. Now it's changed. He's done. And here's the other thing. So if I'm being cynical,
okay, right.
It's just sales tactics, all that he's doing.
Okay.
Right? He's giving you a deadline date. Right. You've got to do it by here, otherwise it goes up. That's it.
Right.
Why?
Right.
Why is he giving you a deadline date? There's two reasons. One, he, after last time where you talked about it, and it didn't happen, he's kind of giving you a reason to do something so that he gets you on board.
Right.
It's not for your benefit, is it? It's not going to benefit you. The only benefit to you is one Ethereum. $2,200 out of 15 million is nothing, right?
Okay.
So there's no benefit to you. The other thing that he's doing is he's also making you self-qualify. Well, you'll have to pass due diligence. You'll have. I only deal with people that fulfill a certain set of criteria.
Right.
Oh well, I want to fulfill that criteria because I want to work with you.
Right.
It's in Russell Brunson's book.
Right. It is. Yeah. Totally understand. Yes.
It's just psychology, right?
Right.
Now, for that reason, why does it benefit? It's not really benefiting you. The perception is that it's benefiting you because you've had to self-qualify. You've had a deadline to hit.
Right.
But it's not. It's benefiting him.
Okay. Well, you
know, and the only thing that you're wanting is access to this cloud of people that will potentially fulfill the whole kind of the requirement. Now, are there other people out there that do that? Yes.
Right.
Is it right to work with them? We don't know. Is Ian the best? I don't know. He could be. He could still be the best person, right? I don't know.
Right.
But I think that being the buyer is kind of like when I'm buying things, I don't like being pressurized.
I see. Okay. All right.
And I don't like feeling like, well, I've got to do it because I'll do it when I want to do it.
I see. Being the buyer, right?
If you push me towards a certain direction, then I'll naturally push back.
Right. Okay.
Because I don't like being pushed.
Right. Okay.
But I'll gladly buy something if it's right and if they're the right people.
Right. Okay. So yeah, go ahead.
No, I mean, I'm just talking generally, right? I'm not. I don't necessarily say that. Okay, for the purpose of do we use Ian, yes or no, and are you 100%? What are you 100% committed to? Is it Ian?
Oh, okay.
Right?
Okay. Right.
Or is it getting this thing done so that we've got the funding, we've got an entity or a group of individual entities that will do the job for us?
I think it's the latter. It's the latter.
Right.
Although from my perspective, right now Ian could be the best fit. Reason is I've also talked. I didn't just talk to Ian. Okay, I also talked to at least 2 other groups of people, and this is one other. Okay, ICO service, Raphael. Okay, so you can see on my screen.
Sultanov, was he Russian?
He isn't Russian. Yes.
Was he Uzbeki? He doesn't look white Russian. He looks something else Russian.
Right. Asian Russian. Yeah, probably. Yeah. Right. So basically, their offer is I have other numbers, below, but this is just an overview. Okay. So this is the I guess the how much they charge. This is how much the team actually pays. Okay, for
I don't understand. What
okay.
30,000 times 3 is 90. Yeah, okay,
so
got
so that. This is pay to head to them. Okay, this is pay to them. Okay. Maybe this is just a summary. And actually for the team, they actually had to pay this total amount. Okay. And about 300K and for 2 months. The reason is that besides this amount, there's also, like other marketing, blogger, white paper, systems, website, all that. Okay, which they have a table that breaks down here. Okay, I can share the details later. Okay, but the overview is the team actually played a total of close to $1 million, $250,000, $750,000, and they raised 55 million. Okay, so this is one specific instance, and they charge 5%.
So this is an example of what happened, right? That basically they raised 55 million, but they paid almost $1 million for that.
Exactly, and but out of that almost $1 million, the team actually only paid this amount by themselves, because at the third month there was funding coming in, and they were able to pay out from the actual funding. So this is actually the I guess this is somewhat confidential, so I think what I'll do is maybe I'll pause the recording for a bit.
Quotes.
Right, true.
But so what is it? Is he saying that he wants exactly the same thing to move forward, or have you not discussed it with him? Or?
Well, so basically, I mean, this is just in comparison with Ian's service. Okay, I see Ian. I mean, definitely they both are, teams. Ian is more like an influencer. This is more like a team of experts that can do this kind of SEO marketing, right? And the charge, right? You can see that the charge is different. They charge the amount to be paid. Obviously, Ian hasn't, mentioned about what the other costs, other quote unquote costs are. Okay, but just for the advisor's fee, team, I think at least they are looking at
so
90K.
It's a fixed fee.
Right.
Okay. So look, the other thing that you mentioned about Ian. Go on, carry on.
Yeah, and I also talked to another guy. Okay, and they talk about we can start with a white paper which will cost about 50K. Okay, they are willing to do a white paper for 50K to start.
So why would we need to do another white paper?
No, sorry. I guess so okay. I guess the service is starting from I recall the package itself was something to start with 50K to start with right. And then there's
so the point is there are a number of different outfits out there that can offer a similar service. So in the past, you and I had a conversation with that guy in Dubai, right? He was offering sort of like 6%.
Right.
Then you've got these guys. Now, all of this is kind of interesting, but all of it, and then there are these other guys in the Ukraine or wherever they are, right? That I've got on my screen up here, who want to kind of. So I said, sorry, been really busy. We may be doing an ICO for a time in these tokenized real estate project. Wow, that's interesting. Let me know if you need help promoting or attracting investors for an ICO. Right? So the thing is, I'm gonna follow that up with, all right, just remind me of what the costs around this will be. Now they'll want to have a conversation. I can deal with that in my time zone. Unless you want to be involved. If you want to be involved, then we can obviously do it together. I'm happy for that. I'm just aware of the time lag. So then I guess the thing.
So from my perspective, I guess this is kind of like what's called the what's it called? It's also talk about anti-fragile, like small downside, huge upside. That's the kind of
asymmetric.
Right, asymmetric return, right? Ian, I think what he's offering is something of that nature, right? It's a small downside because he's asking for 2 Ethereum, 2 or 3, right? That's about 4,000 to 6,000, right, US dollar, right? And all the other teams so far I've surveyed or talked to, I think at least like 10,000 plus, they start from that amount. At least you
Yeah,
have
but
to
that Dubai guy was
Right.
a similar amount, right? He was like, well, I'll take, I think, when you talk, he wanted cash, he wanted dollars, US dollars.
Right.
And he was asking for
Right.
6,000, which
Right,
at the
exactly.
time
5 or 6, yes.
was the
yes.
same
Right.
as
True,
3 Ethereum.
Right.
Right.
So, but then
I think the other
it's
thing
the
that you
question
need
of
to,
the records, right? It's the records. I mean, Ian does have a track record that's public, that the ISO advisor lists. That is actually a public tracking system. I mean, his record is verifiable, and he can pull out all the, I guess, all the other things. That is something I also feel that will be valuable, because it's kind of like getting the experience, the wisdoms of 100 plus, projects that has successfully raised. If you do the math, he's raised 600, I mean, close to $670 million, right, for 127 projects. That's about 5 or 6 millions on average. Okay, I mean, that's Ian's record on average. And because these are public, so even if it's raising a small amount, like let's say $1 or $2 million, right, it's still going to be on his record on that list to be tracked, right? So yeah, I guess
right. Okay.
yeah.
So I think
yeah.
for me, when you talk about Ian, there's
Right.
on that, I get what you just said, but when you've said, well, it's 2 to 4 Ethereum, and then he said there's an email that's 2 to 6, but I think he meant 2
2
to
to
4.
6 was last year's. That was last year's. His last year, that was actually my mistake. His latest
Right.
is 2 and 4, but I quoted as 2 and 6 and email him to
2 plus
confirm.
6. Right. Okay.
Right.
Fine. So
And
2.
he said,
And
he said correct. Okay, so he did not correct me saying that it's 4, but maybe he adjusted, but so it's but according to the latest document, it's 2 plus 4. Okay, but with 12%. I like to bring that down to 10. I mean that's
12%. Right. Okay.
Right, 12. Right, 12.
So you want to bring it down to 10.
10. Yes. Right.
Right. Why would he do that?
Why? Oh, okay.
Now you're gonna answer that question with a lot of fluffy talk about wouldn't it be great if maybe da di da di da. That is not going to make financial sense to anybody,
Okay.
because there's nothing concrete about it.
Okay. I see. Okay.
Maybe it might work if
Okay.
the stars aligned and the moon was full. Right? Maybe. Right?
Okay. Right.
If we sprinkle some pixie dust on it, it's got to be. So you're more likely, right, to go. I'll tell you what, Ian. I understand you do 12%. What I want to know, though, let's say this is our first venture and we're successful,
right,
and we have another, I don't know, dozen or so of these to do.
Right.
What would be our percentage then? Would you consider lowering that percentage?
I see. Okay. All right.
Now, that then is something that he can work with.
Okay. I see. Okay.
You'll then go, well, okay, because you're asking him to give away his value and reduce his value for what? Because you don't want to pay the extra 2%.
Oh, I see.
Again, you're arguing about 2%.
Okay, I see. I
What
get your point now.
does 2% add up to?
Okay, all right. I get your point. I made a mistake, I guess, on that.
No, it's not a mistake, is it? It's just it's just a way of looking at it. Right?
It's a better way. I definitely agree. It's a better way that how you present that. I think it's a much better and flexible.
Can I give you an example from in real world? Right, if I walk into an estate agent now, and I say, I'm interested in buying a property. What have you got? They'll show me a bunch of stuff. I mean, I'll go, great. This one looks really interesting. How much is it? And they'll go, it's this much. I'll go, right. What? And So so they sell it. They get their money from selling, right? So they want to sell it at the highest price.
Right.
Well, I don't want to buy at the highest price. I want to buy at the lowest price.
Okay.
Well, why would they sell it to me and make less money? Now, if I walk in there and I say, I want to buy 10 properties, they'll go, he's a joker because we don't know who this guy is. If you walk in there and say, look, I want to buy a property this month, assuming that everything goes well and we hit our numbers, then I'm going to be looking at buying another one in the next quarter. And then assuming that works out, I'll probably buy a third one the quarter after.
Okay.
That's a more realistic timescale.
Right.
They're more likely to listen to you. And if you can prove that you've got the funds available to do the first one, then again, that makes you credible. You have something tangible that they can work with.
Right.
Now they're more likely to listen to you saying, that's a good number. I can understand why you would sell that house retail to anybody, but I need to buy it at the best possible price. What can we work with? And now they already know that you're somebody who's got a plan for the next 9 months.
Right. Okay.
So I've got 3 properties I can sell to this guy. All right, I'll cut 5% off of each one, and I'll make whatever it is. I don't know. I'll make 30%, not 45, for instance. I don't know. Over the 3. Right? So you get my point, right?
Right. Okay. Yeah.
So that's a real world environment.
Right. A concrete incentive.
But
terms of
Ian's not going to listen to you. I just think you run the risk of being seen and perceived as I don't know a nice way of putting it, but like a time waster.
I see.
Right.
Okay. Right.
Because if you always can negotiate when you from a position of strength, your negotiation is better.
Right. Okay. Right. Okay.
Right? And so how do we make sure we have a strong position?
Right. Okay.
Now, for instance, another real world example, right? If it's time to renew a contract with a customer,
right,
and I go to the supplier and I say the contract's up for renewal, they're interested, but there's been some issues.
Okay.
These are the issues. Have they been resolved? Yes, they've been resolved. Okay. The customer's a little bit pissed off because they had these issues. Okay. What can we do for them?
Okay.
Well, we'll do this and this and this, right? I'm in a powerful position. Now, if the contract's just been renewed and they've got and the supplier's got another 12 months, they're like, I don't care. We'll go through support.
Right. Okay.
You see what I mean? So it's just about how we can leverage what we have. So that's that.
Okay.
And I think we just need to have that mindset when we're talking about stuff. So one of the challenges that you have, Chunyun, is you're telling me all of these ideas and I'm automatically thinking like that and processing the information. And I'm kind of going, yeah, but what if, what about? So I'm just trying to kind of put my stuff out there.
Okay. Nice. Okay. Wow.
So basically we've got to build on what we have, right?
Right. Sure. Obviously.
Now,
yes.
I think this reflects back to what you said about not getting deals to come through or not being able to get them beyond a certain point. And I quite honestly share that same issue because I have a bunch of things that I want to achieve and they're not there yet. Right. And the JCF has been tremendously frustrating because of that same reason. Right.
Okay.
Yeah, I own responsibility in my own right, and I'm not saying it's anybody's fault, right? Other than my own.
Right.
But what can we build on?
Right.
What have we got that we can actually build on?
Right.
Now, what we've got, the only thing in this
question.
particular project, the only thing that we've got is a plot of land in the middle of a city in Taiwan.
Right.
With a house on it, I suppose.
Yeah.
That's surrounded by a much bigger plot owned by one of the largest families in
landowner,
Taiwan.
The largest landowner possibly in Taiwan. Yeah.
Right. So another thing, then my last point is Ian, these guys in Ukraine, the guy in Raphael in
Right.
Russia,
Right.
the guy we talked to in Dubai, ICO, crypto.
Right.
What legal ramifications does this all have?
Okay.
And the moment you start talking about being publicly traded and being a cryptocurrency, you are going to get hit with a quagmire of legal issues.
Okay.
And this is why the relevance of what I said to you on the message was important.
Okay.
Because is it a means of us segmenting ourselves away from cryptocurrency? You see, another thing is, if investors are looking for relatively secure investment strategies,
right,
and obviously every investment has a risk, but a cryptocurrency is considered incredibly volatile.
okay.
Whereas the junk bond, I think Kevin told you about,
right.
is less volatile, even though it is a junk bond, right?
Right. Sure.
Enables investment. So I'm wondering whether or not, and then we're looking at having a group of high net worth individuals globally,
right,
that are investing in an asset, and the fact that we're using a smart contract on blockchain to administer everything,
right,
and then there is nothing stopping people from exchanging their tokens that we generate internally.
Okay. Sure.
So if we sit there and we raise a pool, if we have a platform that we can raise a pool of 1,000 tokens, for argument's sake, or 100,000, or whatever number there is, right? And then we've got, let's say it's 100,000 and we've got 1,000 investors, and that's raised the correct amount, for argument's sake. Then for argument's sake, then let's say that when they bought the token, they all bought at $1,000 each. Again, I'm not doing the math, so I don't know what that works out to be, right? But
that would be
then
15,000 investors. Yeah. But anyway, okay.
Okay, fine. No, okay, cool.
Yeah.
So let's say we had that many, right?
Yeah.
Then, if that was the case, and the token, the token was worth that at the beginning through the community,
right?
But we anticipated that then it would be worth, I don't know. So let's say it was worth $1 million to start with, or 4 million to start with, which is what we want to buy the property, right? But we anticipated that once we've raised enough money to pay for the land and then to pay for the build costs, it would then be worth 50 million, right?
Okay, right.
Then you've got a means of anybody can trade those tokens within the community, but only within the community.
Ah, I see. Okay.
And then it's not on an exchange.
True, right.
It's traded between people, and if people want to, and if people want to come in and join the community, then they can only join the community through buying in at whatever the rate is, and maybe facilitate it in that way, because then it's not an exchange, it's not an open exchange, it's a private closed community,
right.
And which in itself creates a sense of value, and in itself creates a sense of scarcity. Right.
Sure.
But that then I think might change the legal parameters and dynamics.
Right. Okay.
And that way we can actually, you see, in which case our fundraising requirements, it's not an ICO.
Right.
I mean, it kind of is, but it isn't. I mean, the ICO traditionally, people will raise will invest in ICOs because it's going to go on an exchange, and when it goes on an exchange, it will, and the price will elevate, and then other people will join in, and that's where we'll make our money, because we'll dump all our stock once it all goes.
Right.
Well, this is why it's such a
volatile and risky
volatile.
Yeah.
Right. And what does an investor want? Lack of volatility. They want stability.
Right.
They want predictability. Right. They want to know that And so what does this asset class do? It delivers all of that.
Right, right, sure.
Short of an act of God
Mm-hmm.
or an act of war,
Mm-hmm. Right.
which, you know, again, I always raise the point that Taiwan is next to China.
Right, right, right. Okay, yes. But
I think what
yeah.
it does though, it brings about a more stable kind of solution. And I think,
right.
you know, this is the reason why I kind of like, you know, okay, have you done the numbers?
In terms of what? In terms of the value.
In terms of the project.
Value of the okay, okay. That is ongoing. Okay. Already asked the architect and the Henry to do the evaluation. So right now, I think they're pulling the data in the map. Yeah, I'm actually expecting this a rough estimate by tomorrow, because we are going to have our weekly sync tomorrow at about the present time. Yeah. So.
Right. Okay. So that's interesting. Right. So then you raised another point earlier about what it is that these guys, you know, want from the project.
Exactly.
Now, what have we learned?
Right.
In Coach, we've learned about the RDoF question, right?
Right.
We don't actually have to ask the same question in that format every time.
I asked them actually already. I have the RDoS from them, both.
Yeah, generally speaking for their life, right? But what is it in regards to this project?
Oh, okay.
In working with us on this project.
I can answer this to you. Okay, I know the answer. For the architect, Mr. Shao, his business model is actually creating cool demo sites, prototypes in Taiwan that are experimental, that are innovative, that are, you know, that are inspirational, award-winning. And his market, his clients, is in China and Southeast Asia. Okay, that's where the scaling actually happens. So, for example, he's already got his own, they have their own building, very similar to our site, about the same area. Okay, also a few floors. They like to build that, renovate that into like a demo site. So when, you know, when the clients, although there's tension between Taiwan and China now, but expect that to, you know, ease away over the next couple of years. And, you know, when the Chinese,
once it's been invaded.
Yeah, or yes. But anyway, there will be Chinese coming to Taiwan. Okay, that's the kind of the expectation. And basically they can see what he's been doing here with different, you know, concepts, ideas, and, you know, basically take that back, replicate, scale that. Okay. So he basically thinks that our current site, the eco building idea, the combination with veg restaurant and all the other things, the concepts, he thinks those are great ideas, very trendy, very, you know, forward looking. And he sees that as a creative challenge as well, which he can really build a quote unquote a demo work, right? That can kind of show his creativity, ingenuity in design. Okay. So he's already stated that's his intention. You know, he liked.
That's great, but does he? So here's the thing, though, Shinyan. Does he? One of the things that you mentioned, the way in which you phrased it,
right,
is when you were talking about it earlier. Now let's just use this guy for example.
Right.
You've given me two different ideas about how he sees a return on his investment of time.
Right.
One is numerically, through you know, through standard, you know, dollar remuneration.
Right.
But this second one is it brings value to his practice, which is a non-numeric return, because he's going to get that return through other customers in mainland China, Malaysia, and Southeast Asia.
Right. Exactly. Yes.
Now, that's interesting because they're two different things.
Right. Okay.
When you mentioned it first of all about what they're getting back, I kind of sat there and thought the architect wants a fee for drawing up the drawings for working on the project. Now, if we're clear about that, and we've made it, you know, if there's an impact filter that states you, the architect, will get this, this, and this, the success criteria, this, and this, job done, right? And everybody understands what is in the relationship,
right,
then that is clear to me. Do you see what I mean?
Okay, right. Okay.
And I'm just trying. All I'm trying to do is utilize the tools that we've paid for,
right,
from Coach, right? So you've done the RDOS, and I think that when I said in the text, in the voice message, and the same applies to Henry, right, from the management point of view, right? Because Henry, right, he's part of the project. If you're saying that, all right, well, once it's all built, Henry's going to manage it.
Right.
His company's going to manage it.
Right.
What fee is Henry's company going to charge us?
Okay.
I say us.
Right.
What fee is Henry going to charge the property, the owners of the property?
Right.
Well, the normal price in Taiwan at the moment is for his services is 10% or 15% or 20% of the rental income, the gross rental income.
Right. Okay.
Well, if he's doing that, is he getting 30% of the profit from the kind of the builder's percentage?
Okay.
Right? Is he getting a percentage of that as well?
Okay. All right.
Because he's getting paid both ends, right?
So this is what So this is what Henry is looking for. He's looking for, well, he is already looking at the elder residential rental business as like the big market, because there is an expected 200K people shortage, which I share. And their company is well positioned to take that opportunity because they are already working with governments as the social housing provider vendor. They are one of the 4 certified vendors for social housing, in the New Taipei City area. And, this is just, he's looking for a way to scale up their operation. Okay. So one incentive for him is to build up a model, that can be replicated. He's already doing that actually with a small, and then medium, and then large sites. Okay, so he's already got like a small site done, and now moving to others. And this project potentially can be one other model for create elder residents. The other thing he's looking for is raising funds through tokenization, through tokens, basically ICOs. Okay, fundraising and the real estate tokenization part. Because for him, he has the know-how, the pipeline to basically turn properties into, monthly
elder places. Right. Okay.
Right.
Yeah. Okay.
So
look,
funding is his bottleneck. Okay, so if that's raising funds, especially international funds through like tokens is done, right? It's another funding channel for him besides getting money from a bank or traditional investors. He could scale his business. Okay, so that's his incentive, right?
Okay, on both of them, for both of them and anybody else, right? Is if we're gonna structure it in the way that you originally said, is that you have 33% for this and 33% for that, and doing it that way, and you've got the builder tokens and all the rest of it.
Right.
If you're paying people for their time and their effort and their services, in the capital asset and the share of the capital asset and the growth, then you're not going to be paying them anything on the operational proceeds.
Okay.
Right.
Okay.
So if you're paying Henry, right, and the right thing to do, I would say, is for Henry's position of the management, you would only give him money from, or a significant amount, right, of money. You would pay him, no, not a significant amount. You would pay him what is the market rate for managing the property.
Right.
Now you might want to offer him a token, and by that I mean a gratitude amount,
right,
on the token dividend, right, payout.
Right.
So rather than 10%, you might want to give him 0.5% or 1%.
Okay.
As a thank you. This is a recognition that you're doing something for us.
Right.
There you go. At the beginning stages. Right. Because you're going to get 1% of the total assets, but we're going to be using you as the managing agent, so you're going to be getting
your proper fee. Yes. Yeah. I think that was actually Henry's expectation. That's so far being, because they have a already established business model to work with landlords, right? Or property owners, right?
Right.
So essentially, they actually will pay the landlord or property owner like on a monthly fee, which is negotiated, right? They will try to rent that out, right? Make whatever profit, manage, and whatever is in between the two, that's their profit. That's kind of their business model, right? Which is well established.
Right. That's good. So, you see, the other thing then is that you also, if you do both, if you give him like 10%, for argument's sake, and you're paying him 20% management fee, what happens if you fall out with him? What happens if his company gets so big and he doesn't scale and therefore they become ineffective? Then you have to go to another operator. Who does the same thing, but they're better at it for whatever reason.
Right.
You're double dipping the.
Yes. Right.
Yeah. So
they're saying that should be optional, right? It should be like a replaceable component in a sense in this machine, right? In this machine, right?
And it might be that he goes, right, okay, I'll take the 1% this time round, but on the next time round, when I do it with one of my properties, I'm going to be structuring this so that I get, whatever.
Right.
As far as JCF is concerned, the fact that JCF is putting this all together and managing the whole process, they'll always get their 25% or whatever the amount is. But I think this is the thing that we need to be clear about is, and this is why I'm reluctant to go charging ahead with Ian or anybody. Doesn't matter.
Okay.
Anybody. Is because there's so many questions and not enough answers.
Right.
And it's just that clarity, I think, for wise investment is needed. Because Warren Buffett doesn't go into something, or that guy that recently passed away that was right-hand man. They didn't just go into
Charlie Munger, right?
Yeah, they didn't go into things because they just thought it was a great idea. They actually understood their markets. They understood the businesses that they were investing in, and they understood what the long-term implications of it all were. And they Charlie Munger, I actually, it was hilarious that he sat there and I watched a quote from him when he passed away saying, EBITDA is bullshit. Right? I thought that's hilarious. He goes, whenever I hear somebody an investor talking about EBITDA, I go, bullshit. And I just think it's funny that he had that attitude. But I mean, the point is,
sorry. Whenever an investor talks about what? Talks about
EBITDA. EBITDA is earnings before something tax and something.
Okay. Right.
It's just a standard accounting function to try and illustrate the value of a company.
Right. Okay. All right.
So before earnings before tax, well, okay, fine. What tax liability is, and and dividends and something else, right?
Okay.
So you saying I'm 100% committed and I want to get this done and I want to go now is great. That sort of enthusiasm is important.
Okay.
It is. So, but I think the challenge that will be inevitable. I'm not. Look, I mean, theoretically, I'm a mature investor or something like that. I can't remember. There's a term, right? that the Americans the Americans use this term that if you've got a certain amount of money,
accredited investor.
Yeah.
It's called accredited investor.
Bollocks. Yeah, it's rubbish. But anyway, I think, you know, there are guys out there who have got much bigger portfolios and much more experience that will rip to shreds the idea. And what's the point? I mean, what's the point in spending the 2 or 6 or however many Ethereum it is on Ian?
Okay.
If it's not going to float. And, you know, you have to pay him the 2 Ethereum and he'll look at the proposal, he'll ask the same bloody questions. And I just think there's not enough strength in the offer for it to be a no-brainer.
I see. Okay.
These are my reluctancies, because here's the thing for me, Mike Hainsworth personally, what do I want from this? I want this to work because I've got at least 2 projects I know that I could operate under the same banner.
I see. Okay. Okay.
Right? There is huge amounts of potential globally for this to work.
Right. Okay. Right.
But I just don't believe in going at it half-cocked. I think we just, you know, it's like, this is at the moment, I don't think you've got enough of a structure to even get seed funding.
Okay. I see.
Or angel investment, or whatever you want to call the first round of investing. I just don't think there's enough there. There's too many questions.
Right.
So the other thing then, from you know, from that message I sent you, there's at least 3 different ways you can attract different people.
Okay. Right.
You know, it's like you want to do it where you've got a perpetual investment in a project, which is a lifetime investment, right?
Right. Okay.
You've got guys like me that want to, and what I would imagine the Ling and the Henrys of the world will want to do. I want money now to build the project, get it operational, and then with you know, gain standard financing. Once it's a point where it can take on standard financing, and then I'm back to standard financing, right, and pay off all the investors. And then you've got guys that are always looking to raise funds to build property and then sell it,
right,
and walk away from it. But you see, they might sell.
That's actually the developer we've been working for. That's their model. They build house, they sell it, recoup the capital, do the next project. But
they're also the largest landowner in Taiwan.
Yes, but they sell, they don't rent. That's what they've been doing with their projects.
How can they be a landowner? How can they be the largest landlord if they sell? They have to own stuff to be a landlord.
Because that's kind of their ancestral lands. Like it's like this is already the 4th generation.
Right. But that means that they're actually holding some of the land, right?
Yeah. I mean, they still have a lot of lands that's undeveloped. So their development company, what it does is it develops house based on their lands and then sell it, right? That's kind of what the developer company that's been talking with us for the last 15 years. That's their main business model. Yeah.
Right.
So yeah.
So I reckon you've got 3 different variations. Now within a white paper, I would expect that we need to kind of illustrate that.
Okay.
And again, I think the white paper is something that you and I could quite easily craft.
Okay.
And then I think the other thing, I'll put legal issues. Well, not only have we got the legal issues from the point of view, is it a cryptocurrency? Which if we do an ICO on an exchange, and yes, it is. And then all of those issues that you've got with it. But then the other thing is legal issues in terms of what the conveyancing laws are for the country within which the property is.
Right.
And overcoming those, you know, how to incorporate those.
Right.
Because it's going to be different in the UK as it is America or in, you know, whatever the place is, you know, Taiwan or Southeast. Asia, anywhere, right?
Right. So there's a
Yeah.
localized component to that, right? That has to be taken care of. Yeah.
And you know, just to come back to another question that you asked me last time we spoke, and that was about being a project manager.
Right.
That would be something that is a full-time job, and that then becomes a job, right?
Right.
So, you know, another reason why I don't want to do that is I don't want, you know, that would mean me, but that would mean me living in country in Taiwan and then emigrating there for at least 2 years for the project.
Okay.
I don't know that you would want to actually pay me to do that and spend all the time that, you know, because there would be an opportunity cost as well.
Okay.
For me.
Right. So I do. All right. So thanks, Mike. I think those are really good pointers. And I mean, questions to answer. Okay. And I do see that there's a, you know, I guess the white paper part, maybe we can, you know, participate, work together on that, pulling up existing stuff, right? And I do want to discuss this a bit, which is, okay, the token mechanism I've been, you know, kind of thinking about. So, okay, all right. So there's the, I think that this is an adjusted version, okay, regarding the idea. One key idea is that, you know, all the invested money would become you know, become dollars payable. Okay, so let me explain this a bit. So there will be, again, 3 types of token for the 3 types of roles that's involved. Okay, now I won't go into, like, I mean, we can discuss about who might assume which role, okay, for example. But what happens is, so all the invested money becomes part of what's called a builder token or builder fund, which you can think of as a stable coin, okay, in a sense, which we issue, right? So we can start literally at, let's say, $1 per token, right? At NAV value, that's $1. So let's say if we raise $15 million, we have a 50 million token, you know, that we can use, right? So we pay our expenses with what's called the B tokens, the builder tokens, okay? So everything's being paid by the token. Now, whoever gets the token, they have 2 options. The design is, you know, they can either spend it, you can turn that into like cash and use it, spend it, right? They can also hold on to it. And I'll explain why they might want to do that. Now, our tokens, they are redeemable at NAV. So basically cashable. Okay, that is, you can cash it anytime. There's still the voting rights design. Okay, so again,
can I just point out 2 things. First of all, you've got the second point, pay all expenses with B tokens, and the first point, you've become a builder token.
Right.
And you said it, for instance, that's $1 per token.
Right.
You've also got a B token underneath the profit share scheme, and you've also got B tokens down at the bottom. So on the expenses.
Right.
So I would suggest that there needs to be a distinction between names, because that's confusing to me as to straight away, right? As to why you've got two different types of. The other thing then is all tokens are redeemable at NAV. Obviously, if NAV is greater than $1, how are you going to do that?
Okay, I'll explain. Yeah.
And if you raise, doesn't matter if you raise $10 or $10 million. If they're all redeemable, there needs to be a time limit by which you can redeem it.
Okay.
Because you know, if I do an investment today, and I want to pull my money out tomorrow, you need to give me the money.
Okay.
So that's those are my only comments so far.
Okay.
Sorry.
So what happens is okay, so maybe yeah, the idea, okay, so I'll also be transparent. I mean, this is still a rough design, okay, so definitely things can still be I guess improved, fixed.
Okay.
But I guess the idea is that, okay, so I'll give the okay, the B token example. Okay, so there's the funding right part. Okay, so sorry, the voting rights. So this is about making major decisions. Okay, so each token would cast 1/3 of total votes. Now there is you know assuming that there's the money is spent, the value that's been created with whatever endeavor, whatever investment project, okay, there's a profit. These will be the profit sharing part, okay. So the investor basically gets literally, like double in terms of the profits, but also the designer builder part, they would also get some of the profit, okay. So this is why someone who gets a B token might want to hold onto it, okay, assuming that they see the future for the project, right? Because they have two choices. They can cash it or they can hold it, okay? So how does this work is that, the profit, well, actually, assuming that's, let's say it's in fiat currency, right? So that can be turned into basically the funds that's behind the token. So all the tokens are collateralized in a sense that there is a fund associated with the token. Now okay, so basically the investors, they will get more share from the profit, right, than the other two roles, which right now the design is half split between the two, okay. And this is kind of the profit first model in terms of how the potential revenue will be used. So this is just an example number. For example, profit is being reserved, right? So that's basically that's going to be the part of the profit share. The designer, that will goes to the D fund. Tax, okay, being reserved. Expenses, okay, so these are basically revenue that's going to be paid out to cover any existing ongoing expected expense. They could become new tokens to the B fund that can be used for pay expenses. Okay, so the idea is that the NAV net of the B token actually will increase with addition of profits. Now we can also do something, for example, because it's going to be a lot of money that may not be used all at once, right? So, I mean, there can be some financial leverage, for example, put that into some kind of saving account or some kind of interest-bearing mechanism, right? To increase the overall value, okay, of the B token fund, which also would increase the net value for the B tokens, okay, over time. So B tokens essentially, because of profits, expected profits that's going to enter into the fund pool, the net will increase, okay, which is incentive for people who are getting paid to hold on to it. Okay, so that's kind of the design. Now okay, so this is about token issuance. Okay, so I tokens, basically the investors, they are issued at face value. So that or the NAV. Now, how the NAV is for the investor part, that could be something that's defined by the the total assets of the company. Okay, so Okay, let me maybe just make it clear, like, so, which could include like properties, lands that's being owned. Okay, by the total assets of the company. Now, so for example, if let's say the company initially, initially, like we got $15 million, right? And that all becomes B tokens that are yet spent, right? Because B tokens, initially they will be held by the companies, right? By the company until they are being given out, let's say to some construction workers, to architect or design, whatever, right? As costs. But the company will still hold a certain amount of B tokens, right? And in this process, it could also use those to purchase like lands, right? Or other things, to become part of the company's property. That's all the basis for the I tokens. Okay, does that make sense? So the investors tokens basically own, like they own the value of the company essentially. Now the D tokens, they are essentially, okay, sorry, maybe, okay, now to think of it, maybe I think the I and D tokens should be based off the assets of the company, maybe by different ratios. Okay, so so maybe these are different ratios. Okay, I'm just giving out some ratio. Okay, just for example, like something like that. Okay. Okay, this is just right now just some arbitrary numbers. But then, so what the D tokens, it's being basically given to the core team. So for example, whoever qualify as the core team, because the designers are essentially the decision makers, the management, okay, the people who brings in the ideas, the expertise, the know-how, and they are responsible for the decision making of the whole project. Okay, so these are the holders of the D tokens. Now, so, traditionally that would be kind of like the management, right? Or the people who are the chief, the C levels kind of people, right? Now the B tokens itself, that will just be fully backed, collateralized by the underlying, let's say, stable coins, fiat assets that's being backing. Okay, so they're essentially a kind of stable coin, or rather cash-like. Okay, so we do want some, the voting is for some major decision making, such as who belongs to the designer part. Okay, who goes in, who goes out, like that's it. And any other major, so these are like standard governance aspect. Like if there's like certain members, 2/3, they would like to raise an issue to be discussed or to be voted on, they can do so. Okay, or any major decisions the designers would like to put forward for people to get a vote, get kind of a consensus decision making. So those are the voting topics. Okay, so I guess that's the overall design. Okay, I guess still rough. Now, in terms of Henry and the architect, we can do a model. I'll give one example. Okay, maybe we can do this, which I think you might like, is that, so the I tokens are the investors, right? That's clear, right? That's whoever puts money into the project, the venture. Now, for example, JCF could assume the owners of the D token. Okay, I mean, a simple model would start with that. Like, that would be like what JCF, the role of JCF, the company, right? And the B tokens will just be held by, whoever's doing work for pay. So this would include, for example, the architect, right? And, the likes of Henry, or whoever. So based or whoever is getting a pay for their effort. So this is something, potentially we could do. Now, you talk about we might want to provide additional incentives for, let's say, him as a gratitude, right? 0.51%. That can be put into part of the D tokens, right? Because that's kind of the, I guess, the decision-making part and the kind of the management part. So yeah, but otherwise they could be compensated simply by the B tokens, for example, right? But for the initial effort, if they're doing work without getting paid, or before we actually have raised funds for the B tokens that we have cash to pay out, they could potentially be compensated by some of the D tokens, right? Let's say a fixed amount or a fixed ratio for that, for their initial work. That is another way to look at it. So this is kind of like company shares, right? In the traditional sense. Okay. All right. So I see your, how do you call this? The
brow.
Yeah.
My brow.
Brown.
Okay.
All right. So yeah, so that's the.
So I've got a bunch of different questions here. Right?
Okay, sure. Right.
So, okay. I'll start with the minor ones first, right?
Okay, sure.
Tax at 10%. Why is it 10%?
Oh, it's just an arbitrary number that depends on.
So it could be anything.
It could be, yeah. It could be.
Okay.
It could be what's proper given the local legal jurisdiction, right?
Yeah. Okay. So all of that, profit at 10%, designer at 10%, and tax at 10%, and that's all that's just.
Okay.
Kind of could be anything, right?
Right. It could be anything. It's just a number that's being put for now. Yeah.
Yeah.
But,
the way in which you relayed that profit first.
Right. The key is to reserve some amount before paying to expense. I guess that's the basic idea. That's the profit first principle. Yeah. Just reserve some key buckets before they're being put as expenses. Yeah. Being used as expenses. Yeah.
I did. Okay.
Make sense?
No, it's just it's just rewording what any sensible business would do anyway. But it's just writing it in a different format.
Okay.
For me, you get your money in. You know what your cost of your sale is. You segment that to accounts payable. You know what your income tax is going to be. You know what your VAT is going to be. So you put that to the VAT account. You know that roughly speaking, on your year on year, you should probably allocate around about 10% of your profit to corporation tax. So you put that. The rest is your operational profit. Right. Now, if you want to take 10% of that operational profit and put it into a rainy day fund, then that's good sound business. But you've still got the operations of the organization to pay out of the remainder.
Right.
So if your cost of sale is 30%, right, you've still got 70%. If you then got a 3% of that to pay, then you've got 67% left. If you allocate 7% for corporation tax, then you're now on to 60%.
Right.
Then if you want to put 10, you've got 50% for your operational expenditure.
Right.
I just made those numbers up.
Right. Something like that.
But that's just about sensible allocation of funds. That's not, that's for people who haven't got the wisdom to sit there and allocate all their expenditures before they kind of start spending everything that they've got. All right, so that's that. You then mentioned excess. So with the excess, so we raised 15 million, but we only in the first instance we only spent 5, so we've got 10 million sitting in the bank account, and that 10 million goes into let's say a normal deposit account.
Right.
And that, let's say that normal deposit account gives you 10% a year, for argument's sake.
Right. Okay.
Or you find some way of generating money. And then that 10% goes back into the fund, is what you're saying.
Right. Sure. Yes. Yeah.
Why would you do that?
Why? Basically.
Yeah.
Okay.
Now, just hold that thought.
Okay.
Just hold that thought.
Right. Okay.
Because it kind of comes to my last, so the question that I had last time we spoke about this.
Right.
And what you're doing here is you're trying to blend two things which are not the same.
Okay.
In my understanding of what you've said,
right,
these things aren't the same thing. You've got one which is a project to build a property,
okay,
and you've got a second one which is a company that will do the building of the property.
Right.
They're not the same.
Okay. Okay.
Because your operational costs and you're asking for funding to buy a plot of land. You're then asking for funding to
build the construction,
to then
right, to spend on the construction,
to do the construction
work, right, the recon, right.
And in return of all of that, you're going to pay everybody some money to compensate for them lending it to you in the first place.
Exactly. Right.
And you're going to value their tokens based upon what the end result is.
Right.
That's all to do with the property. If you're then going to say, well, I'm going to give you rights to vote on how we actually build the property, not going to happen. You'll never get it to work. The reason is, if you need to, let's say, for instance, an example I gave you last time, the guy was building 3 houses, right? 3 houses on a plot of land. The plot of land cost him 400,000 with planning.
Right.
He agreed a building contract with the building contractor of giving them a percentage of the end result, less materials.
Okay.
He knew what his materials were cost were going to be, and then along comes a structural surveyor after everything had been signed and said, you've got to put a retaining wall in there. It's another 100,000. Okay. Where's that going to come from? Now, because this guy was privately funded, he had to find it. Now, in our example, it's small beer, right? We would go, well, it come out the main fund. But you would have to tell everybody who's got voting rights that a new issue has come up. The new issue is this. We didn't anticipate for this because it was unknown to everybody in the world.
Okay.
What are we going to do? Now, if you put that open vote.
No. Just a feedback on this. So I said that the voting are mainly limited to these 3 types of things. Okay. One, who becomes the designer, right? That could potentially require a consensus, a majority kind of a consensus. The other is the any major issues raised by members of the community, right? That could be something they'd like to get resolved. Or the designers want to put forward something to decide.
Okay, so this is
otherwise the designers will make most of the decisions, operational decisions, without having to put a vote for everybody. It's not necessary. Right?
Okay.
Designers are there.
Okay. Point taken. Okay. But I don't see that this is about company membership. This is about company growth. This is about the company. It's not about the asset that you're raising the funds for. So this is where you're trying to design something which will fit two elements that are not the same.
I see. Okay, let me clarify maybe one thing. The company is an asset management company. Okay, so the company owns the assets, which is also why, I did not think this is not really the structure for, let's say, JCF, right? I actually see maybe JCF will fit part of the designer role, for example, right? for, let's say, making key decisions, right?
I don't think
So-
the Ling family will be interested in this model.
Oh, okay. Mhm. If this was
This is a
to,
model that works really well for Shenyun, right? Shenyun likes
okay.
this model.
Mhm. Okay. Mhm.
Have you shown this model to Henry?
Not yet. This is why
Okay.
we're discussing.
I
right?
can. I would be really surprised if Henry went, yeah, what a great model. I love this.
Okay. Mhm.
Because it's not a. I think there needs. I mean, I'm happily to be wrong. I'm always happy to be wrong.
Mhm.
I don't see it. Right.
Mm.
My instinct tells me you've got two different things here.
Mhm. Okay.
You see, if you make here's the thing. So in this, you're suggesting then that for the D tokens, currently the idea would be that JCF would take all of that.
That
Right,
is a
JCF would-
start. That's a starting point. But
Right,
you know,
okay,
I'm happy to be inclusive of whoever we think that should be part of that designer group.
Yeah, okay, fine. So
Right,
let's say,
right.
for instance, the architect
Right. And
is
Henry,
so good that we
Mhm.
have to
Right.
bring him in, and we
Yeah.
give him,
Right.
4%
Yeah,
of
something
the D
like that.
tokens,
Right. Right.
for
example.
argument's sake.
Right.
Right, I get you. But what you're doing then is you're making an individual business
Mhm.
for each asset.
Each project. Is that what you're saying?
Yeah,
Okay.
yeah.
Mhm.
So how many projects do you want to do?
Okay. Mhm.
If there's 100 projects, where's the scalability?
Mhm. Okay.
You're getting involved in 100 projects.
Mhm.
That is not scalable.
Mhm.
You want JCF to be the one that. Okay, so I would think that
Mhm.
JCF being the entity that knows how to create the platform to enable the asset to
True.
be funded,
Mm.
that is where JCF gets its money and its
Mhm.
profit from,
True.
each individual asset, and put together the smart contract and all the nuances for building the ability for the investor to
Mhm.
generate income, to generate funds
Mhm.
to build their dream,
Right. Right.
development.
Okay. Okay.
Making it a
what
shared
about,
event.
I see. What about this applies for a project? I guess a specific, plot of land, the buildings above, and the, like a dedicated fund for a particular construction project, or
You're making
a
one
rental
fund
project.
per project, then, aren't you? You're making one thing, and I think you need to separate. Right?
Okay.
Look, here's a
Okay.
plot of land and a
Right.
project,
Uh-huh.
and we're going to raise some funds for it. Right?
Mhm.
Look, there's a reason why the standard financial packages
Mhm.
work. Right?
Mhm.
They've been working for centuries.
Mhm.
And
Okay.
there's a reason. There's trial and error that
Right.
has honed them to work the way that they are.
Right. Okay.
So replicate that as best as possible.
Right.
The nuance is the fact that we're creating
Right.
a blockchain smart contract mechanism
Right. To
that
facilitate.
will enable
Right. Mhm.
to facilitate the raising
Right.
of funds.
Mhm. Right. Mhm.
We don't want to reinvent the way in which people
Okay.
operate.
Okay.
All that we're doing,
taken.
value is.
Agree. Yes. Right.
So I think this is why I need
agree
this is
with
why I
the
want to see this
direction.
separation.
Right. Okay.
But forgive me for labouring this point. But if I am wrong, if there's a way in which we can do it, then I'm happy to sit there and consider it. But again, one of the reasons why the project needs to have a bunch of numbers is you can go, right, the land is costing this,
Right.
the costs of development are this,
Mhm.
the
Right.
anticipated revenues will be this, and we'll break them down to this. These are the risk factors.
Mhm.
That then becomes a property project that you can sit
Right.
there and work with.
Mhm. Right.
The
Okay.
management of that is up to the people who raise the funds and they deliver on it. And their credibility as being managers for that project is part of why you invest in the project itself. So you're investing in the project. You're not necessarily investing in the company. You're not creating a company, because then you need to have a company legal structure.
Right.
A limited company or whatever it is. Right?
Okay.
So I just think you would just, split things into nice simple boxes and keep them simple.
So I guess my question to you though is why, I guess, why can't this structure, I guess, be used for a project? I mean, although definitely you can put this into a company context, right? If let's assume we're just building one project and we have just one company that's associated with these real estate property, which some people actually do that, right? Or they put a few real estate, into a company. I mean, I know some people do that. There's an investment approach in real estate where, for simplicity, and when they want several investors, they actually create a company, right, to own the assets.
That's true.
Right?
They do.
Right.
Yes.
I mean, I know that's existing practices, right? And for another project, they could just form another property company, for that.
Yeah.
But I take your point, right? That's probably not what we want to do, because we're thinking about supporting hundreds, if not thousands or tens of thousands of projects, right? So, but my question is, this whole process, we can also apply it for a project, right? Underneath
here's the thing. I'd need to say, so look, your example there is absolutely right. So if you and I were doing a project together and we were just doing it in conventional terms, then you might go, well, I've got 100,000, you need 100,000. So why don't we work together? I don't want to do anything. You do all the work and I'll just supply the money, and we'll go, okay. So you'll set up a company, you have a company name, I have a company name, and we'll set up a new company.
Right.
That company will be ABC Development. And you and I will be the shareholders of it. Right. And in fact, your company and our company might be independent shareholders and not us personally, right?
Right. Sure.
So it's an arm's length kind of scenario. You stick 100,000 into the bank account of ABC Developments, and then Mike charges off and does the development and gets returns. And then we either liquidate the company at an agreed point because we've got an exit strategy, or we carry on the company until something like that, right? Yes, agreed. That does happen. But that's very simple, because you have got the money and you're bringing that one thing to the table.
Right.
Now, if there were 1,000 people all bringing £10 to the table, it'd be a very different scenario, wouldn't it?
Exactly. And that is why tokenization could potentially solve that issue. By
solve it? Why is it? What's broken about it that needs a solution? We're not solving a problem about how a business will operate. We're solving a problem of how a person will gain finance. Right. Crowd financing does not give ownership. When you go to crowdfunding, you don't get a percentage of the overall profitability of the business. You get a defined share for your investment.
Right. Okay. So I guess you're talking about,
and that brings me to my last.
Right. Go ahead.
That brings me to my next question about the definition of an investor.
Right. Okay.
So when is an investor a B token? So you want to call people investors, people who have a 66% voting share. Again, you're cross-pollinating two things. Now, if you say to me, right, for the Flourish project, I've now got the numbers, and I now believe that the numbers are, with a 5 million investment over the course of 2 years of build, we'll have a $50 million project generating $1 million income a year.
Right.
For argument's sake, right? Okay, that's the project. Now, managing that, okay, so that if you were to take that to the open market and go, if you were to go to Chris and go, right, I need 5 million because that will be my purchase and build cost, all of it, and it'll be worth 50 million, and I'll give you 20%. It'll bite your hand off because for 5 million, he's buying 20% of 50, right? Whatever that is. I can't do the maths, right? He'll go, yeah, well, that's easy money because I'll get that increase within the 2-year time frame.
Right, from 5 to 10 million. Yeah.
But he's not going to actually sit there and want to have voting rights and be a part of the company. He just wants to get his return on investment and his return on capital.
Okay, fair. So sounds to me like I guess the adjustment is just to remove the voting part, right? Or to simplify that. Actually, removing that would be enough to, I guess, to do it. In terms of,
I just think, right, for all of these percentages and ideas and all the rest of it, it just becomes really muddy, really quickly.
Okay.
It might be clear in your mind because you've kind of conceptualized it. The way in which it could become clearer is if you sit there and go, Flourish, these are the numbers. This is the project. It's going to do this.
Right.
I know that I need 5 million to start with. I know that I'll end up with 50.
Right. Okay.
That's what I need. And so I'm willing to pay X percentage of that 50 to get my 5 today.
Okay. All right. So how about this?
And then work out to do that. Go, if we tokenize it, we can do it this way, and we tokenize the project. However, the benefit of if we tokenize it and add together a business concept with it as well, the benefit is this, and then you can show me what it actually means, because I don't understand why to bring them together. I can't see the benefit. It's just muddy.
Okay. Good point. I guess. Okay. Just to quickly answer why originally there's the voting idea is, I think, a protection, and assuming this is an ongoing operation. Okay, assuming this is, a evergreen kind of project that's going to generate revenue, then the voting part might produce or build in some accountability, and I guess rights protection for the parties involved, including the investors. And I guess that's what this is, about when I was conceiving this. But I also see your point in terms of, for investors, it could be very much, I want to know what the return, I know what's the exit, I know what's the time duration, and I will trust you as the manager, right, to do whatever decisions. I guess maybe one argument for building the voting part is just like, I guess, in a Celsius example, right? We as investors, we put the money for the company, right, Celsius, to manage it, right? Or I guess in the case of FTX, and they somehow, mess up, or I guess had issues, right? And now we are just at the mercy of whatever decisions the company is making, right? We have nothing, no rights, no voice at all to speak, right, about what we think could be proper. Now, they do have put on some votes of, certain resolution, but again, that is, even the resolution itself is proposed by the, by the management or whatever. So I guess that's just speaking from one specific example of why, I was trying to, try to get some power balance, right, so to speak, into this.
Yeah. Okay. So here's the easy answer to that.
And I think
with land.
Right. And I do believe that, is potentially is also the trend moving forward, right? Because part of the magic of token is that it's a blend. You know, let's face it, it's a blend of a lot of the traditional instrument, right? It can be part share, part credit, part bonus, right? Part incentive, part, right? It can be utility, it can be security, and I guess that's just how things are going to happen. Obviously, you know, some dominant models probably will emerge that people accept, you know, as working better, right? And yeah, I'm not saying this is, you know, the best or perfect model, but I'm just seeing, you know, like some voting power balance can be built into this. Now, having said that, okay, since this is just the first project, if simplicity buys more buy-in, makes things easier to explain, makes it easier, faster to move forward, I'm happy to do that, right? I'm happy to, I guess, to give up the voting aspect, you know, even completely for this project. I mean, that, I guess what you're suggesting is simply remove. I mean, all the decisions will be made by the quote unquote designers. I think that's what that would mean, right? But then again,
I think if you wanted to build in an element of security for the investors, then the thing to do is that if they're effectively you see, here's the other thing.
Right.
If you go to a bank and you say, I want to raise 5 million, they'll go, what's okay? What do you want it for? And you'll go, I want to build this house. Great. Okay. How much is it going to be worth? Right. Ultimately, they'll want you to put some skin in the game.
Right.
Now, if you're asking for 100% investment, then it's highly unlikely you'll get that, because everybody wants some skin in the game, because it protects the investor. Because it protects the investor by saying, well, all right, we as owners of the investment will own the property and we'll put 30% in. So if it all goes to pot, we can sell the underlying asset at whatever phase it's got to. So if in property, it's either the bare land, it's the bare land plus planning consent, it's the bare land planning footings, or, you know, outer shell, first build, first fit, so on and so forth.
Whatever residual value.
Whatever stages they're at. And then that then could be sold. And the person who's borrowed all of that money will lose their 30%. Because it's all gone to pot. Now, if the advantage for the builder, the developer, if the advantage is that they can get 100% investment, that's a massive advantage. But there has to be some kind of balance that would be the what's the right word? The equivalent of that 30% skin in the game. Right. And I think what you're saying, your point was with those, you know, banks, those two examples that you gave in the crypto land. The investors just put money in without any security, which is why the likes of Bezos and the likes of Madoff, what's his name? Can't remember his name now. All of those people said
the FTX guy, Sam.
No, not him. The Warren Buffett and his mate.
Warren Buffett. Okay.
Why they kind of
Charlie Munger.
Why they said that crypto was a bunch of rubbish. There was no security in it all, and you've learned that the hard way.
Right.
So how do you build that into it? Now you're suggesting that there is this kind of voting rights.
Right.
But that concept is rather convoluted and not simplistic. It's easier, I would imagine, to sit there and put in there that, you know, a clause that should everything go to pot, all remaining assets will be transferred back to token holders proportional to the amount, and then the underlying asset will be sold at market rate and split between all token holders.
Okay. Yes. That's actually the idea. I think that's okay. We don't.
That's a fair way of dealing with it if it all goes wrong.
Right. Okay. Right.
Now you see. Here's the thing. You mentioned Chris would invest and then hand it all over to the people who are doing it. This is why this is why it's so important that the team who are managing it, the architect, the builder, and so on and so forth, have credible status.
Right.
So your architect is doing this because he already has credible status. This becomes an example that he can then leverage overseas in Southeast Asia.
Right.
Well, you take that same credible status and say, this guy, and you build a whole profile around him. He's the architectural genius.
Right.
Then the build firm, these guys have done all of this, and they've done blah blah blah. And this is where they're at, and so on and so forth. And you replicate that all through.
Yeah.
That then becomes the credible management team.
Right.
But now, I know I'm cross-referencing different terminology here, but it makes the investor go, right, great project, great returns, great team. I'll invest my money.
Right.
But then you always have the caveat that things go up as well as they go down. We can't predict what the cost of we can't predict what the future will hold for the property values in this area, and yada yada yada. But then that works, I think, better. It's simpler than voting shares. It just confuses people.
Okay.
But if you can show me that it works using Flourish as an example, then happy days.
Okay. Right. All right. Thanks. So I guess
we've been here 2 hours now, Shinyan.
Yes. So probably should call it stop. But really appreciate the feedback. I think one simple fix is just remove the voting part from this. Yeah. Just yeah. and then see if the token design makes sense. Now, I don't know if you agree with the profit share number and the other part of the token design. And if this is something I can present to Henry and the architect tomorrow, is that something you think?
What percentage is JCF? I still think JCF is creating the ability to go blockchain, right?
Right.
And then to then go out and outsource to a world of investors.
Right. That's the value.
Using this mechanism.
JCF's,
that's the value that JCF brings. So where is JCF getting paid?
So this is what I'm thinking about, right? The
17%. You're saying that JCF will get paid 17%. And does that also mean that
this is in terms of the profit, right? So this would be the like architect and the property manager. Right.
But that's profit. Where does right at the very beginning I asked you about what's in it for them, and you're now telling me that you're going to give them 17% of the profit from Flourish, plus you're going to pay them
the future profit. Right.
No, but you're gonna pay them what?
Well, pay with the construction.
No. So let's go back to that original conversation.
Right.
Henry charges 20% fee per month
right. Sorry,
from any of the rent that he takes.
Right. Sorry. The okay. I think the okay. So okay, so I guess
I think you need
right.
to.
Uh-huh.
I wouldn't show
Okay.
them this right now.
Okay,
Right?
okay.
I would get a better picture as to what that project will look like at the end.
Right. Okay.
And go, look, we're really close. You can say to them, we're really close at having agreed what we believe to be the fairest way of doing the structuring of the tokenization and how to remunerate.
Right.
But what we need to establish first is exactly what the costs are going to be, what the build time is going to be, and then what the end value is going to be, both in terms of the value of the property and the value of the revenue that it's going to generate. Because if we can work that out, then we'll know how that factors with the way in which we can put together the tokenization element.
Right. Okay. All right.
Because if Henry's going to charge you 15, 20% or whatever he's going to charge you, why give him 17% of the value? That doesn't make any sense.
Okay.
You're from your family's perspective, you're cutting yourself out of 17% of the capital asset value.
Right.
But you're also paying him a fee.
Okay.
It's just that for me is making absolutely no sense commercially.
I see. All right. Okay. All right. So yeah. All right. I think this is going to be a conversation. I can see that. Yeah, but it's good. It's all good.
Conversation with who? Sorry.
I'm sorry.
You're saying this is going to be a conversation?
Yes. I mean,
with who?
because I do have some. I guess this is okay. With you, and also I guess to say because there's I think there's also the elements we want to put in is if they are putting some of their expertise, their like their time and their professional and their reputation to this, right? I think some part of that should be compensated with tokens, right?
Yeah, fine.
I think it's right. I mean that's
and I use the term token element, right? As a token, as a token element, right?
Yeah, right. And it's just how we want to structure, right? So,
but do you want to give them 17% of your profit, of your capital asset value? Let's say that's 17% of 50 million. If we're using that as an example.
I see. Okay, so
and they're already taking a percentage and a payment already.
Right.
It's a bit. I don't know how else to explain it to you, Shunyun, but do you think it's acceptable that you should pay somebody twice?
Okay. All right. So maybe it's a different ratio. I think it's just a matter of ratio of what's happy for the investors, right? And
I've agreed, but I don't think you can work that out now at the beginning. You have to work it out once you know what you're going to get. You don't know how much. If Henry sits there and says, "I'm not going to take anything off of you because I'm going to get I think I'm going to get a percentage of the tokenization." Again, you've still got the problem of that's great, Henry, but your company. What's the contingency if your company fails? What's the contingency if I paid you a percentage of the capital and you're not doing the management? What happens then?
I see.
The architect is slightly easier because the architect isn't going to do anything other than create drawings. Well, you have to establish that as well. Are they going to take it through the planning process? Are they going to make sure that the plans are agreed within the local government? What's the costs involved in doing that? I don't know. I know roughly what it is in the UK.
Okay, I guess it's the trick is there are existing ways. I guess they have their business model, obviously, right? That's well established, right? This project is different because traditional model is somebody will pay the architect to do the work, right? And that's a project. And then traditionally,
sorry.
Yeah. Okay.
Can I just take this call because I told somebody I'll be ready by 1 o'clock.
All right. Sure. All right.
Just bear with me a second.
All right. Sure. Mike, you're speaking. I think you're muted. Okay, all right. So I guess that's covered now. Okay. Okay. I think we're fine. Oh yeah, all right, all right.
Okay, now we're back. Okay, fine.
Yeah.
All right.
All right. Yeah, I think that's it. I think it's good enough for now. It's
Bit of a long session, isn't it?
yes.
Again, I'm not trying to be negative, Shunyan. I'm just trying to figure out.
No. Right. It's all good. It's all good. Yeah. Don't worry.
And you know, I'm also genuinely doing it for your benefit, because I don't want you to sit there and find yourself.
I know.
You know, you'll be screwed. I'm not screwed over, but making a decision now when you don't know everything is, you know, that means that's a costly learning event, right? Which is fun. You learn from it, but I'd like to think that I've understood a few things about property so that I can be more informed for you.
Yes, definitely. Yeah, really appreciate that. Yeah, Ben talks about raising the bar high, right? And Charlie Munger filters out almost everything. He says no to almost everything, so that he can really, you know, bet big on the yes.
Yeah.
So you're serving as the say no. So that's good. I think I appreciate that. Okay.
Well, you know, I'll be happy when you and I are the Warren Buffett and the Charlie Munger of 21st century, certainly.
I think will happen if we can stick together.
Let's see why not.
Because
all right.
Yeah. All right. Yeah. Thanks.
I'll let you go. Cheers, buddy.
All right. Take care.
Thanks
Take care. Yeah.
Bye.
Bye.